Good morning, everyone, and welcome to the PivotBoss pre-market video for Friday, July 28th, 2023. I am Frank Ochoa, aka PivotBoss. Happy Friday, everyone. Here's a look at the daily time frame of the ES. Right now, you'll notice the previous session we had a tremendous bearish rejection. One of the larger rejections we've seen from the bear standpoint in a long while. A high range day, outside reversal, tremendous reaction on the highs, steady selling pressure throughout the day. And when you look at the chart here, especially year to date, it's one of the larger rejection days we've seen in a good long while, certainly since back here. So is this the rejection that's going to turn us around at least a little bit, stop the uptrend at least a little bit? Perhaps it could be. Today's midpoint is going to be very important. 45.94 is the level there. That's the previous session's midpoint. And right now we're above that midpoint by a few points here. And that's the level really to watch today. Because when you have a significant rejection like this, a rejection tail, the midpoint is the most important there. You do not want to close beyond that midpoint today if you're a bear. If bulls are able to close it through this midpoint, it would be a tremendous failure of this sell signal, and we could be looking at a tremendous squeeze ahead. But right now, if this is day one rejection, then this midpoint by the end of the day, bears are going to defend it here. Bears are going to defend 4,600 and push this thing down, and ideally we would see a 1 to 3 or 1 to 5 day pullback. And in a more bearish scenario, you may see a pullback that takes us perhaps back toward the FOMC key level below. That's the June 14th FOMC key level, 44.21. We just developed a new one here in the previous couple of days, 45.83. If it sells off from here, we may come back to this one, find a rejection, and return back to the newly minted one up above. So that could be a path forward here for the market. Again, for today, previous session's midpoint, the most important, 45.94, big time level, price right there at the moment. If we find too much acceptance beyond it, this rejection sell signal here could be done. But again, if prices are able to fall back below here, and by the end of the day, perhaps even close lower, we could be looking at a little bit more of a pullback ahead. So keeping an eye on this rejection tail here. Very, very significant rejection sell signal in a very bullish trend. So you got to watch it very closely. Keep an eye on the midpoint. Any failure through 45.50 starts to open up a bit of downside ahead. Looking at the NQ, very similar price action here in the previous session. Not quite as bearish as maybe what we've seen out of RTY or the YM. But this one still putting in a decent rejection. You can see here the previous session, big time rejection tail there. Outside day briefly, closed back inside it. But right now, price is through the mid. You can get through the mid a little bit. You can get as high as these highs here, but that's about as high as you want to get before you start to fall back below. So that midpoint is going to be very important. The midpoint is 15,707. If prices start to fall back below 15.7, we could be looking at a bit more weakness ahead. How much more weakness? We'll see how deep a pullback we could get. But really, this market has been so strong that shaking off weakness has been what this market has done. So to close through this midpoint today, to close above it, would suggest a straight on squeeze yet again. So keeping an eye on this zone here, watching it very closely. If there's a failure to hold to 15.5, that could open up a pullback as deep as 14.8 up ahead. But even if that happens, it's likely still another buying opportunity until proven otherwise. Looking at crude oil. Crude oil is basically flat on the day. We were looking for price to go up there and get the 80.50 level, and we got it yesterday. 80.60 is the high. Overall, that blue dot right there is the previous year's close, and that has been the sticky level for this market. It's been a magnet for price. The first day of the year, sold off away from it, snapped back to it. Held there, sold off, snapped back over and over again. No matter how far it went away from this level, it's always come back to that level by the end of the year. So this is tremendous to see that move materialize here. We talked about this narrow range here and how a breakthrough 77s not only gets you to 80.50, but it has enough energy to follow through to 83.50 up above, and that's the top of the range. So can we see more strength out of crude oil ahead? I think any pullback here could still be a buying opportunity toward 83.50 up above until proven otherwise. And right now, narrow range price action, if we get one good little pullback, it could be a great continuation up ahead. Even a pullback into, say, 78s could still be bought for a continuation up toward 83.5 ahead. All right, let's take a look here at gold futures. You'll see right now gold gapping up on a rollover gap, hitting the 2,000 level. That's the level we had as a target if prices squeezed back above 1940. Right here on this lower high and the attempt lower, when it failed back over here, we mentioned, okay, a squeeze above 1940, 1950 opens up 2,000. Took a little while to get there, but finally got there. Now that we're here, we're at the top of that range. We could easily fall right back to 1940 and stay in the range until proven otherwise. So we'll keep an eye on 2,000 here. If it becomes resistance, we could be looking at a little bit of a fill of the gap, followed by a little bit more downside up ahead. So keeping an eye on 2,000 here for gold. Lastly, looking at the YM. Again, the YM and RTY showed tremendous reactions in the previous session. They were the first to see rejection. YM rejection at the previous session's high, RTY at the previous week's high. Each of those with outside reversals, tremendous weakness here. You can see the midpoint on this one here, right there. Let's see the mid 35.595, 35.595. So we're just shy of that level right now. At the moment, we did push a little bit through the 600 level, but this is about the spot here again where price doesn't really want to go too far beyond 600 here if this selling tail is going to materialize to the downside. Ideally, this is the pullback. Ideally, you start to see some reaction, and then you see this thing drop down some degree. Doesn't have to be a massive sell-off, but one thing we'll see here is that this month, from that low, 33.8, we've rallied straight to 34.8, which was a target. When we broke here and rallied, the idea was that we rallied to 35.8. We hit it perfectly here, failed new high yesterday. That is a tremendous 2,000 point move for the month. If this is the strong high, then we could be shooting back to at least the midpoint of last month's range, or this current month's range. That's 34.8. So perhaps the 34.8 target could be ahead. This pullback could lead to a drop into that zone from a very short-term perspective. And even if that were to happen, again, it could be a buying opportunity for a return right back up. So keeping an eye on this midpoint, keeping an eye on 35,600. Bears want to keep that offered for a shot lower. To close above that level would be a huge failure of this rejection and could lead to a tremendous squeeze ahead. All right, that is it for now. We'll see how this plays out heading into the rest of the session. Happy Friday, everyone. Remember, we do have PivotBoss Masters live sessions next week. If you are part of PivotBoss Masters and a member of that program here, you can go to the PivotBoss Masters dashboard and you'll see the schedule for next week. Again, looking forward to that. Please be sure to like, share, and subscribe. Have a fantastic weekend, and I'll see you in the trading room. Take care.